Trading is closed on the 13th of June 2023. As always, we'll do our disclaimer, go over our calls, and make some predictions. This is my plan for tomorrow, June 14th, but I won't be doing any trading. I'm busy all day long, and I won't even be watching the market tomorrow, so I'm going to do the analysis, but just remember, I'm not going to be following it during the day, and I'm not going to have as much time in the evening as I normally like to have to do my analysis. Look for the early low today. This is it. Tomorrow should also have the early low. We said unless we gapped up, we should see 47.13.52, but I said nothing stopped us from gapping up, and that's what we did. So we'll just add that to the list. It should print at some time. So just a reminder of what we said. We had the CPI report. I can never predict what happens with that. Tomorrow's even more unpredictable for me. It's the FOMC meeting. Typically leads to wild swings, huge moves. I never trade it. Well, hardly ever. MEJT said this move was false. Wouldn't stick. Said this drop was false. Wouldn't stick. That's played out. We didn't quite get the criteria I used for an ultimate sell signal in the morning. When I didn't have a computer program, I would just eyeball it. And if I eyeballed it, I would say it was an ultimate sell and that we should trade under this low. But I can't tell a computer program to eyeball it. And so based on the numbers I fed into the program, we don't quite have it. But if I never had the program, I'd be expecting us to undercut this low at some time, and probably not before too much time had passed. Catch is, while I have the statistics for the numbers I fed into the program, I don't have the statistics for this, so I can't say how accurate it is, but I think it's reasonably accurate. Doesn't mean it prints tomorrow. Gapped up, higher high, closed under all the highs, shows you went nowhere all day. Time runs out early tomorrow. Early tomorrow you gap and take out these highs, or the pattern's negative and you trade lower. Doesn't necessarily mean that you close lower, but sentiment indicators are telling us that we're trading on thin ice here, which doesn't necessarily mean it cracks tomorrow. Tomorrow's market has early low. It could still gap up. The FOMC report comes out tomorrow. Typically leads to wild swings, which I can't predict with sufficient accuracy to entice me to risk my money. If it isn't a slam-dunk trade, I don't tend to take it. In addition, I'll be busy all day, will not be watching, let alone trading the market. We gapped up, hit a higher high, but closed under intraday highs, and if it's maintained at tomorrow's open, this should lead to lower prices, regardless of how we close. Sentiment indicators remain on sell signals, and the market is leaving a number of targets behind, and they should fill at some time. None of this precludes going higher tomorrow, but I think we're near a correction in terms of time, though not necessarily in terms of price. These overextended sentiment readings don't stay around forever. They aren't a pinpoint indicator. You can't just look at the sentiment readings and say you're going to drop tomorrow, but you can't say you're not going to keep going up forever, and that's what I'm saying here. So tomorrow has the early low. If these hold, we should trade lower. Typically wild swings after the FOMC announcement. There's a 99% probability, based on what I read, that the Fed is through raising interest rates, and they won't do it at this meeting. That should be good news, and don't forget markets like to peak on good news. So if you're going to trade tomorrow, which I'm not going to do, I would be careful. And that's today's call.